YouTube, what's going on? I just kind of wanted to talk, to be honest, and kind of go over today some important lessons that you can use in essentially all time frames and kind of some things like that. So, as from yesterday, we were still looking for some type of buy-side body or up-close candle to come in through this BPR, this whole area that we had here. So we ended up coming right up to it, stopped just short of it, but really from body to body sense, it was right where it needed to be. And even the missing body that we had here already existed here, so that's why we kind of had a body fill up to just that point there. And it really is something you can do if you want. You can just turn off wicks, in all honesty. If you turn them off, kind of just see where things stop at, it can help make a lot of sense and help see it. You almost want to just look past the wicks, essentially, for that type of stuff. But as for like the intraday movement and everything, because I was looking for that buy body to exist there, when 8:30 news came out, and we sweep this high here after 8:30, the news, Judas, everything like that, you're already given your 2022, if you want to go that route, for an entry right at 9:30, and then you can ride it downwards, getting to be continue, and then this one not getting filled and just tanking through it. That can allow you to use as an inversion, and essentially to allow BPR entry exit to almost basically trap people down there. So now the other thing that I kind of wanted to mention with that is when I've heard people talk about when they're looking for like the refills on fair value gaps. Sometimes it goes 50%, sometimes it goes the whole thing, right? Sometimes it doesn't do it at all and it's breakaway. Like here you get a 50%, this one trades through fully, this one here gets traded through fully and everything like that. So one thing I would really recommend trying to do is actually using the order blocks instead. So even here, after you get your CSD and all that good stuff, your last down close candle is here. So instead of trying to anticipate like this FEG filling, when you're given that kind of OB FEG pairing, if the order block gets hit based on the order of the PD array matrix, the fair value gap should almost always be filled if the order block is getting touched. It pretty much has to be, if you really think about it. So if you're going to be looking for FEG fills, instead start looking for order block fills and see if it comes back to there, because you're going to take less drawdown initially. Even if you were shooting for the entire fair value gap fill, it still would have filled it because you're limiting at the order block instead. So it's a really, really strong thing you can start to use for that type of stuff. The other thing that I wanted to mention, and this goes back to the whole balancing idea and everything like that, all of this downside delivery here, when we hit this order block here, and we already have downside movement on these 4 candles, just looking at bodies right now, again, just looking at bodies. If our sell side was delivered from here down to here already, when you push past through it, there's not a need or any other additional retracements into here because sell side was already offered at this price level. We'll just say 17,405 to 370, just to round some numbers. So from 405 to 370, you already have your sell side delivery there. You really should only be looking for sell side after you push past that area back into 405 and above, and you shouldn't have to trade back underneath that or anything like that. So when you have that delivery from 405 to 370, when you're looking for the retracement, you're only looking for the sell side to the highest point in which sell side is needed. That's why the bodies are like able to stop here. And again, also QQQ 30 minute that we were just looking at. It's the same reason that the buy body is able to stop here, because there was already buy side to that level. So as you're pushing downwards, you're only going to need to come up to the lowest point for buy side that is offered, and the highest point for sell side if you really, really think about it. It sounds backwards, but yeah. So when you're given, hello, So when you're given that type of showcase or anything like that, you can then start to use that as for how far can a retrace really happen. And again, even same thing here. As the market pushes up, you have sell side from essentially 470 down to 410. So as you push past this, you're not looking for too much of a retracement back below this area because it's already had sell side and buy side delivery, so it's pretty much balanced. You can essentially scribble it out or cross it off. Why that's also cool is if you're ever trading back through that range, because it's balanced, you can pretty much hit the entire thing already. So even if for whatever reason we're down into here tomorrow, you can already anticipate this low getting hit off that alone. And what's really cool is you can keep doing that, and as long as the range is actually balanced, you're not just saying that it's balanced. You're actually balancing it out and seeing that there's buy side and sell side through both of the range at whatever price level it is. As long as that is happening, you can pretty much shoot through the entire range afterwards. So while you're doing all that, the big thing that you also want to be looking for is FVGs, and essentially a continuation if you're given that direction already. So we're already on buy side of the curve pushing up. If we're presented, for example, a fair value gap here, that's fair value, means they're neutral, that's fair value for more buying in this case. So you should presume that you're going to be getting a new high on that range, and you do here. And then you're presented with another one. So then you can take that higher and keep trying to push, essentially Tom H it along the skies. You get another one here, you can keep pushing. You get another one here, you break above this high. Now from here, from this range, from 3 p.m. afterwards, that is the only point in which you do not have a fair value gap to go off of from the previous range. So at the very worst case, even if you tried to short this down to here, for whatever reason, worst case, it'll stop you from being super early. Because you don't have a fair value gap, you shouldn't be assuming continuation and everything like that. And again, notice how you have these two down close candles here. You get sell side to the highest point in which sell side is needed. So it's not random that the body stopped where this body did on sell side delivery. And again, if you ever want to, just turn off Wix for a second until you can see it. Just looking at this fractal here alone, you get a move down, a movement up, you get the pullback here, you get another pullback here, the new high, then you get your failure swing. So just looking at this alone, you have sell side from this price level and downwards, and then it pushes through. So this allows it to act as all internal, because you have sell side from essentially here and below. So you're only looking for sell side back to that level, the highest point in which sell side is needed. And then allows it just to continue, reacts off this, and then switches back, and then goes for the new high. So that's really what you want to be looking for when you're kind of balancing ranges and everything like that. As the market, especially if it's in a distribution phase, it's only going to go for what is needed and then continue. It's not going to go back any further than it needs to go because it wants to keep moving so fast that people don't hop in, if you really think about it. So that's kind of the whole idea there. And again, if you're really going to say that all of this is balanced, well then as you trade through it, you don't have to worry about, you might get a reaction off something here or even this, but you're not looking for it in anticipation of that actually holding the range, and you actually go south side of the curve and you sell through this. Now, we do have NFP tomorrow, and for how parabolic this move is starting to get in terms of the buy side of the curve, very possible the delivery stops around midnight London. The buy side delivery. As it just gets so parabolic that eventually it will literally shift somewhere up in here and they'll start the sell side delivery. So I'm actually kind of bearish for NFP specifically tomorrow, especially now that we've ran FOMC high. Admittedly, I wasn't looking for it, but the fact that we hit it already this early in the session is not a bad thing for shorts at all. So that's kind of the idea going into tomorrow. And again, worst case, you miss NFP report, everything like that, you're trading back through this balance range, you already know you can basically sell stop through it. And you can just look for up close candles to write it down, SIBIs, all that good stuff, same thing here. Because you're going to notice the BISI continue, or like the FVG continuations near the end of the phase. You're going to get your turtle soup first, of course, order block, breaker, all that good stuff, and then as you're kind of just distributing through everything, it's just going to be fair value for more buying, internal runs, and then just continuations at like the very, very end of the sequence. Or the phase, the cycle, whatever you want to call it. So, those are kind of the two big points I wanted to point out there, is just balancing the ranges, and then the idea of using fair value gaps for continuation. And really, that's like the main thing to use. Now the kind of quick lessons though and everything, I kind of just want to see how you guys are doing, honestly. You know, even for the information I'm giving right now, with it being hindsight, after the fact and everything like that, I really wanted to put an emphasis on like the type of execution you guys may be doing or may not be doing, and even myself for that matter. You know, I was, for as long as I was looking for that buy body fill through the fair value gap and everything, I did get it. But the opening move really caught me off guard, because I was just not looking for it, and I was looking for, oh, retracement here, run for it, but it was clearly sell side of the curve, no doubt about it. I'm not even going to argue and say, oh, I saw this. No, it was just flat out not. And that's totally fine. But if you're going to be making those types of errors, which to me that's an error, in all honesty, just because of information presented, but how do you go about dealing with that and then recovering from it after? Do you just do the walk? Do you try to keep trading? Do you swap directions? Do you put a limit on how many times you can swap directions? Because there's only 2. So that's kind of one thing there. But really, especially after the PM session, we were hovering around here. It was pretty obvious to me that we were going to blast through this. With this whole consolidation here, you're only balancing out a range to expand from it and basically throw it in the dumpster. So by the time we've done all this here, and we're doing this here, there's no need for any deeper retracements back into anything. So I had originally shorted basically here at around 120, pushed higher, I closed for break even, and I swap long. And I pretty much close it out over here, pushing above this high. Now, back to the rules that I was saying, BSC continue. If I see a fair value gap through distribution, I should assume continuation through the range, in all honesty. So me not holding this, again, not holding this, because I already bailed out here on the pullback, how to go about fixing these errors, because they really can be costly. You know, it prevents your winners from running and can more so exacerbate your losing positions, because I did go short after closing this long, trying to be fancy, quote unquote, and basically doing too much instead of just riding the long that was there, because the long never broke. And this is kind of going back to just, not even Douglas, but just in general, why is it so obvious after the fact, you know, giving the lesson, everything like that, but then in the moment it's completely botched or missed, and just something completely, you do the complete opposite of like what you either were looking for or what you should have done in general. Because even the short here, and even more so the long that I took after the opening fact, after RTH open, looking for, you know, that movement up to here, basically something like this. When that doesn't happen, and you're looking for reasons as to why it didn't, you know, again, why does it always look so obvious and clean after the fact? Why not seen in the moment? Because even there's no denying, you know, worst case, I don't care what you say, you have CSD. Worst case, you can at least say there's CSD here, you know. Turtle high, CSD, there's no denying that, even in the moment. Or even if you are in the moment and you're trading, what is stopping you from missing your information that is right in front of you? Because even oil, I took the long here after 9 o'clock and held through this immediate slam through. Did not mitigate block this, so no break-even exit or anything. Given the opportunity again, I attempt to swap short here, pushes me higher, I go back long, and then it crushes it. and then I swap back short here at this fair value gap. And again, instead of holding for this new low here, because these are all just stacked failure swings, I sell like here, and then it collapses through. You know? But again, super obvious looking at it. Just up close support. Nothing mysterious about it. Even when I was long, after 9 o'clock, I was looking at this SIBI here and going, hey, you know, what usually happens when you get a SIBI? You get SIBI continue, right? So when I was literally presented that information before the 10 o'clock candle started, before the 9:31 closed, and I didn't do anything with it, even though I was consciously aware of that scenario playing out of, hey, SIBI continue, new low, this long should be toast, you know? And even same thing on NASDAQ. I did completely miss NASDAQ, the opening move, but the long especially. Completely blindsided by market information that I can see right now very, very clearly. And I'm not going to act like it wasn't there in the moment, because it was, because the candle exists there. So I can't say that the information wasn't there. And it's really just figuring out what is occurring that's causing me to miss or not being able to see that information. You know? And that's pretty much the whole journey I've been on, in all reality. Or at least very, very close to probably like one of the larger problems that I have in trading. You know, for as long as I've been doing this, and for how well the chart reading is, not being able to see it in the current moment is essentially, it's almost useless. Because you can learn it all, but if you have no practical use for it, even if you do have a practical use for it and you don't actually use it, well then it's like, well, then what's it for, you know? So it's just kind of to point out to see if anyone has anything similar to that, or it's just that move is so obvious after the fact. In the moment, you think, how could you even miss that? You know, that's kind of like the big thing that I just at least wanted to point out and see. You know, who else may be going through something like that, especially if your chart reading, like your tape reading, is exceptionally better than your execution, or even not exceptionally better, but you have essentially like even the profit gap of like what you can do on demo versus what you can actually do when it comes to live funds, evals, whatever it is, to a live account. What is that gap? How wide is it? And more importantly, how is it even there? What is different in your state of mind that has you being so much better in demo, whatever, in the fake monies, and then you go to the real thing, it's just completely all tossed out the window, you know? And it could just be, you know, like survival, that type of stuff, but you're just in a completely different state of mind. You're just not having that information, you know? So it's just something to think about for everybody that's watching this. You know, really, really ask yourself, if you're not profitable for whatever reason, what are the reasons? What type of executions are you having? How are you losing your evals? Are you over leveraging, you lose it all in one trade? Do you tilt, lose 10 in a row, flip-flopping? You know, that matters. It really does. Because you want to look at the order that it occurs and how it occurs. Because chances are there's a similarity to them. Even though the end result may be, oh, the account's gone. How did the account get lost, though? That's what, like, for me, over trading is almost rarely the case. It pretty much, it honestly never is. Like, I'm never over trading so much that I'm hitting commissions or anything like that, or swapping directions too much. But again, that's just me. Someone else, that could totally be their entire thing, is they lose 1-2 trades and then they're gone, and then they just tilt, they're flipping 2 directions 20 times, you know. But I don't know, it's just some food for thought. And just kind of see where everyone's at on everything. Unless you know that you're not alone with this. You need to realize how many people are at where they're at because of whatever the reasons are. But there are more people losing doing this than winning. So, don't forget them. Or if you ever see people on Twitter or anything like that, honestly, or just stay off Twitter. In all reality, follow your crew. Other than that. So, So, but yeah, that's pretty much my whole thing anyways. Like I said, just missing current market information that is useful. And even like oil, I saw that this high was turtled. It was basically turtle into a failure swing, but the turtles don't house. So I can't be looking for a type of move against a spot that essentially should be protected. But I also knew that going into 9:30. It's like 9 a.m. open for oil. So it's one of those things where I'm able to partially see information sometimes. Even though sometimes I just don't use it. Or I can't see it, like NASDAQ after the long. Or there are times again where I can see it, I don't do anything with it. And you just end up bag holding the position, and you know you're way deeper in drawdown, something you could have instantly swapped 10 minutes ago, and not taking the damage. Or worst case, you mitigation block and you're fine. You know. So that was just something I wanted to point out for now. It was just more of like I hate to call it a fireside chat, more just a vent in all actuality, but it's just something to think about as everyone's going into next week, and just in general. How are you at your trading? Where is it at? And you really want to sit down and ask yourself that question, you know. Not so much why are you doing it, because pretty much everyone's doing it for money, but what is stopping that growth from occurring? And that's where the first thing is figuring out what it is, and then going from there. But for me, it's definitely having information, knowing the information, and then it's not getting utilized at all. Or it can be seen but not utilized, or vice versa, where the execution will just freeze based on like the initial analysis direction, that type of stuff. So I want to leave you guys with that, but that is also pretty much how I derived a lot of those rules, a lot of the balancing ideas, BISI continue, all that stuff. It comes from a very, very, I don't want to say scarred, because that's not the right word, but I've seen it enough times before, and just looking at, you know, EOD charts after the markets kind of stop moving, and just kind of recap the day and everything like that, you'll really start to notice some very, very popular patterns that always occur, of course, but you know, being able to see it in hindsight is the first thing, and then you have to be able to see it in real time afterwards, but you need to see it in hindsight first, so you even know what to look for. That way, in the moment, you're not blindsided by this, trying to short this as like some crap turtle, which is what I did. But even though I swap long, that's great. Should have never been long in the first place. Or I should have never been short in the first place. I pretty much consciously knew market was poised to go higher to hit the sell button. And that's its own battle right there that I have. Some other people, I'm sure they don't have that, to be honest. But you really gotta ask and see, what are you dealing with and what are you going through, you know? So, and again, even though, yeah, you long swap, great, but you wrote it for 20 and it went for 45 more based on just BISI continued rules, you know? So, it's just one of those things I just want to bring up and kind of mention as we're going into NFP, all that good stuff. So, but I'll see you guys in the next one. I'll definitely be trying to upload more during next week. I did start a 50k eval, and then my top step one I basically passed by accident, so it's funded technically. But that had one winning day and then a loss today off the long. So it's basically flat 1-on-1. So it has 1 day in. But the take profit trader also lost. That has about 1,500 left. But the min days were hit as of today, so that's cool. So I can pass it ideally tomorrow, Monday, and trade on that on Tuesday, and then just farm the top step. So that's the goal for now, at least on that end. But we'll talk about props, evals if people want to, or just how to trade them, because I do think they're psychologically, I think they're very different, but chart-wise, they're pretty similar. And especially if you can, again, abuse limits on order blocks, anything like that, and actual limit orders on them, you'll save yourself a lot of initial heat on a lot of these trades. So you're not taking, you know, 15, 20 NASDAQ drawdown trying to hit a fair value gap. You're in at the order block and you're taking, you know, sub 10, sub 15 points. So it does a lot if you're on like a 50k and you can only handle, you know, 50 points for the entire day because your drawdown's like $1,000. So that does add up, especially if you want to try to do like multiple trades instead of doing like a one banger where you take like a 37, 40 point like mental stop loss and only use that. So, but we'll talk about that maybe sometime in the future if people want it. But for now, please take those 2 lessons I talked about kind of the first half, and then really analyze your trading and just how is your execution in comparison to what you actually know, and how are you using it, how are you not using it. And also a reminder to be present in the moment. Every moment, every tick the market moves, it is unique. There's even just while talking, new candles have printed, that's new information regardless. So if the market's showing you one thing, you want to show loyalty to that unique movement, and you want to have loyalty to your pocket and not your bias. And admittedly, I was very guilty of being loyal to the bias of long, and I got the long perfectly essentially. It just took 36 minutes to do it, you know, instead of hopping in 4 minutes after the open. That's not to say that's not here nor there, but that was the big caveat today anyways. So okay. I'll see you guys in the next one. Be sure to like, comment, and subscribe. By all means, any topics, please write them down. I would love to discuss them. I could talk for like 12 hours if you let me, so I just don't like editing. But I'll see you guys in the next one.